what we see here to start out the day, the S&P 500, the NASDAQ are up on the day, almost completely bouncing back. Well, not completely. Bouncing back from yesterday's sell-off towards the end of the day. But yeah, really interesting to see. We also see gold up, and I just want to show you guys this trade. Are you kidding me? Look at the entry on this. I self-proclaimed am not the greatest at entering the market at the right time. It's a really difficult thing to time the market. But can you look at that trade? Are you kidding me? This is either going to look like a heroic trade if the market, continues higher today, or it's going to look it's going to really disappoint me if it comes back and takes out that entry price. Look at how good that entry was. I wish I had more of these types of entries. My goodness. But take a look at the daily chart. I bought gold yesterday inside of the VIP room and immediate profit, which, man, can the market gods just like do what I asked them to do, please? That would just make my life easier. I bought GLD, which is the gold ETF, yesterday, and you can see like crazy how this thing whipped down to that level, and look at just how quickly it respected. This is where, I am an advocate primarily for fundamental analysis, but technicals play a role, man. Look at the entry on this guy. Just snapped right off of that beautiful level of support. Very nice. But yeah, I went long gold yesterday, and I think I'm going to go ahead and trim my stop on this one. Taking a look at the daily chart, the way we reacted off of this wick. In fact, that's what I'm going to do right now. I'm not going to move it all the way to break even, but I am just going to trim this. I don't mind if we come back and test this area. I'd be fine with that. I just don't want to see it break. So I'm going to move my stop here really quick while we're on the stream. Why I love ETFs way better than futures is with ETFs, I can get very specific to what I want to allocate money to. I could allocate to specific countries. I could allocate to specific sectors. I could allocate to specific bonds, which I guess you could do with futures. I can allocate to specific industries like cybersecurity or medical devices. That is why, to me, I really like trading / investing in niche ETFs. A lot of what I trade is, the NASDAQ and the S&P and gold and stuff, but I also do trade individual sectors, etc. So that's why. I also trade a little bit of options. So I love the versatility that I have trading on a stock brokerage over a futures brokerage. Great entry on gold. Congrats. Thank you. I appreciate it. We'll see if it holds. I mean, this by the end of the day could look really, not great. If gold rolls over, if Powell comes in more cautious to cut rates today, it's not going to be great for gold. So let's set this up. When we're talking about gold, we're talking about the dollar, we're talking about stocks today. Let's set this up for Powell's speech in 30 minutes. If Powell comes in, let's just map this out. Okay. So if Powell comes in and he is hawkish, he's not going to be hawkish. They're not going to look to cut rate or hike rates. It's either, let's do this. Is he going to be more in the 25 basis point kind of idea, or more on the 50 basis point kind of idea? Because the implications here, guys, are huge. All technicals go out the window when these fundamentals come into play, okay? If the Fed is looking to cut interest rates quickly or slowly, it will dramatically change which areas of the market perform well or poorly. So if Powell comes in very dovish, meaning he says the revisions to the labor market data, as well as just the trends of cooling labor data and the proper inflation progress that we've made, make us feel more confident towards a 50 basis point rate cut, what will that do? A 50 basis point projected cut in September, if that becomes the new expected. Right now, this is more expected by the market.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
If you get 50 basis points, gold is going to fly, in my view. But what happens to stocks? Stocks, they diverge, in my view. If you get 50 basis points, most things are going to rally. They're going to say, look, great, we'll get... Most things are going to rally. If you get projections for massive amounts of rate cuts, 50, 50, 50, like over every single meeting, then the market's going to get nervous. But a 50 basis point cut to start things off, if they do 100 basis points by the end of the year, stock market's going to like that. Because the stock market's going to say, okay, that is relieving a lot of the restrictive policy that the Fed has currently. 25 basis points, though, there's a divergence here. In this, when I just talked about sectors, right? What's going to like this one? Real estate. Real estate would like this. Small caps, right? The Russell would like that. Smaller companies would love this. This would be more relief on the interest rate front. What would care less about this? Big tech, right? I think that, Qs would still go up, but they're not going to scream higher compared to, if you told me right now, Nick, Powell's going to signal a higher probability of a 50 basis point cut in September, I would say Russell over Qs. If you told me, also gold, right? So here's the things that do well. If this happens, if you lean towards 50, TLT, so bonds, gold, real estate, small caps, that party leaves the station, right? That train leaves the station for sure. But what about if you get 25 basis points? In this case, 25 basis points, the Qs probably look the best, in my view. What else looks the best? I stay long SMH in both scenarios. I'm okay with both. That's semiconductors. Qs, will do well if the economy's hanging in there and you're getting rate cuts, regardless if it's 25 or 50, Qs are probably doing well. But if you want to talk about outperformance, if you think 50 basis points is coming in September, these are your friends. Real estate, small caps, gold, TLT, right? Bonds, if you're more cautious, if you think rate cuts are coming from the wrong reasons, these are your areas. You can see how many niches there are within this concept of rate cuts. Rate cuts is a deep conversation. Are you talking about rate cuts for, the right reasons, meaning the economy's cooling off and we have plenty of room to cut rates because inflation's coming down? Then that's sweet spot, good situation. That's where you want to be long these two. If you are getting a perfect soft landing, what do you want to be long? If you said there's going to be a soft landing for sure in the next 12 months, real estate, small cap companies, high risk stocks, tech, those things are going to be monsters. But it's a fine line. It's a fine line, guys. This is where it gets tricky. There's divergence even within the 50 basis point concept, because guess what happens? If you get 50 basis points because the Fed is really worried and that the economy is looking really rough, suddenly these are going to do horrible and these are going to shine. See how thin if you want to be outperforming the market, this is why it's hard, because the market is not, it's a winner takes all kind of market right now. Unless, it's not a winner take all, a 25 basis point cut. Because what that would signal is that the Fed is like, okay, things are good enough, and we don't see the economy crashing. We think things are good. This is, by the way, this is kind of the forecast. This is what is likely going to happen, in my view, and according to the market. Some people are leaning more towards the 50. Some people think it should be 50. I think the Fed will probably do 25 because there's been some good labor data that's going with it. Gold bullish rating killed it. This pullback yesterday was really a nice pullback opportunity. Looked kind of scary there, but came down to this level and just snapped right back, which is awesome. Let's look at some other ideas that the Edge Finder has had. We talked about pound USD. Let's look at where the pound dollar is looking. Look at that pound dollar. My goodness, this thing is a beast. So the bullish rating on the Edge Finder for the pound dollar has looked good. I know Kiwi dollar, we also discussed this one. Not bad. Nice little bullish move through. What else? We can just take any of them. EuroCAD. I haven't even looked at this pair in a while. EuroCAD's been getting a bullish lean. Very nice. Pound CAD. Let's look at Pound CAD. Pound CAD has been getting a really strong reading. Let's see where this one's at. Look at that. Beautiful. Pound CAD. I don't trade this pair usually, but looks really interesting. If we pop through the highs, that could lead to some further upside. That looks strong. UJ. Let's look at UJ. UJ's been getting more of a bearish read the last few weeks, which has been really an interesting call. I never took any of those trades, but man, has it been pretty spot on to lean on the bearish side of this one. UJ, I really, as a potential hedge to my risk on positioning, a pop in dollar yen to me looks like an opportunity to stay bearish on it. So I'll keep an eye on this one. We're hitting this big multi-month support level right around $73 a barrel. Do you think that oil may be bottoming out here? And I guess to tack on to that, if we are going to see some semblance of a soft landing, right, meaning that the Fed begins cutting rates and the economy hangs in there and maybe even starts to reaccelerate again, could this potentially be a great kind of value buy on oil or perhaps energy stocks, with the idea being if the Fed cuts rates and things, start to actually perform well and the economy starts to accelerate and we see global growth bounce back, that could lead to oil demand going up. So are you more on the bearish side, thinking that the economy is going to slow further, or that supply will continue to be very high, so oil could go lower? What are your thoughts on it? Do you think it's near a low, or do you think it has room to continue going lower?
Yeah, I think we will see maybe a bounce back. I'm expecting to see the market trying to bounce back at the moment. So I think I don't know if it's last week or last week, OPEC countries actually they were meeting, which means on that they were actually trying to say they will be reducing the supply of oil, and on that the market did try to go higher. The market tried to go higher around this level, but it went down again. But what I like is the time the market was going down and to reach this level, actually that reduced, it gives us a hope that there is a reduced inflation, because we know that when oil is going up, it means that things slowly, or inflation slowly, has an effect. And I like the fact that everything, or almost all the major economic events, they were like cooling off, and also oil followed that. That was actually good, but slowly I think we will see the market trying to push up again, even though maybe it might not really that be aggressive, but I feel like the market has to go a little bit higher.
Yeah, I think, Kenzo, when it comes to oil, if you're somebody who is very bearish on oil at these levels, I think what you kind of have to think is you sort of have to think that global demand is going to continue to slow, And if that is your thought process, then you think that the global economy is likely to go into, some form of a stronger recession. So if you're somebody out there and you're like, I'm very bearish on oil, you have to remember that oil, like any other commodity, is a physical, a good that has a supply and demand attached to it. The supply and demand dynamic is impacted by the global, economy. And so the thought process is, if oil goes low, remember, there is scarcity involved here. So if the economies of the world are not falling apart, which they are not currently, there is a floor to this price of oil, right? Same thing with copper. Same thing with agricultural commodities. They have a physical demand in the world. There's a real demand for them, and that there is a floor to that. Where how low prices can go. That being said, if you get something where the global economy is expected to really shrink, then oil could go much lower. But I think you and I, Kenzo, are more on the page of, or more on the thinking of, the global economy is not falling apart. And if we do see rate cuts start coming across, the Fed and other places, it could lead to bounce back in the economies, and perhaps we look back on oil and say, wow, $73 was actually very low in the price of oil. Not to mention, there is that one other thing to think about, Kenzo, is Russia and Ukraine are still going at it. There's the Middle East, there's Taiwan and China. If you were to say, none of those are going to have any escalation for years to come, I would disagree with that. I think there's probably a good chance that at some point in the next, year, 2 years, 3 years, unfortunately, there's probably going to be some supply concerns which cause oil to go up due to conflicts.
Exactly. No, that's true. So at the moment, actually, what I like about the market at the moment is we're focusing on the good side, because it seems like inflation all over the place is going down, but we still have these tensions which can actually change things very quick, or let's say overnight, because if China and Taiwan on the other side do something that is going to be bad for the stock market also. And on the other side, oil, Middle East, also we have this issue of tensions nonstop, or also Russia. So that is going to affect oil like way too bad, and automatically that will also lead to higher inflations again. You see,
I'm looking at just everything is ripping higher. Gold, silver. You still got anything going on silver right now?
I've got credit spreads on SI. I'm long SLV with ownership. I'm liking silver a lot.
Guys, on the Powell front, we'll keep an eye on it. We're gonna keep looking for headlines and stuff. Powell got what he really seemingly wanted to said clearly by the market's reaction. Seems very dovish. Clearly stated that the upside risks to inflation. There was a pivot there, Chris, that was pretty monumental. He has been saying dual sides, both sides look evenly distributed. Today was different.
All about inflation. It was all about employment today.
Yeah, he said upside risks to inflation are not as significant as upside risks to unemployment. What that tells the market is rate cuts are coming, and they're coming fast. And that the Fed, I put out this whole tweet yesterday, Chris, that the Fed only hates one thing more than inflation, and that's deflation. They do not like the recession concept, because the real value of money goes up a ton, and then their giant mountain of debt looks horrendous. So they don't want the economy to slow. So we got confirmation from that, and market is loving that. But what is notably loving it more is gold and silver. Gold, silver, oil, commodities are actually outpacing the jump in indices. That being said, Russell, I'm feeling pretty good about the Russell. What about yourself?
Let me take a quick look at it. So RUT are the trades that I need today. I mean, it's ripping in a big way. I have shares of IWM at two. I own shares at $200. I'm trying to think what I collected on my. It was a ratio spread. I think I took like part of that 182 by 2 and change, but I own shares at $200. We're at 217. I'm going to try not to cover it. I'm going to try to let this run back to the highs. If the IWM gets to, we had the FOMC highs from July right around 227, 228. If we get back to that level, I may add in a covered call, but ideally, this is still like that really nice catch-up trade where if we get the IWM or the Russell at all-time highs, cool. Like I'll be taking a ton of profit up there. But this is also one thing I noticed today. This is MES, which is the micro E-mini futures for the S&P, and the NQs. I mean, the NQ was down below the weekly VWAP all night, and we just ripped above that during Powell this morning. But I have seen an interesting rotation where we clearly got closer to the all-time highs with the S&P than we did on the Nasdaq. Understand that yes, the S&P was down 9 and change, almost 10%, where the Nasdaq was down 15+%. The NQ was down over nearly 20%. So there's more of a comeback. But I do wonder if the market broadening. Do you know that RSP hit all-time highs versus the S&P? Yeah, RSP is at all-time highs. Yep,
that's great to hear.
So broadening out is a good sign. That also is helping the Russell, kind of showing that, there is some flow going into small, medium, large cap, to the sense of it's just not Mag 7. I mean, I think I have a screenshot of this yesterday. This is yesterday's heat map. All Mag 7s were down. Everything else looked okay. I wouldn't say this isn't bright green everywhere else, but
Chris, it might be back to the broadening trade for a minute here, because you're talking about, okay, you just got from the Fed chairman an unbalanced risk now. Unbalanced risk favors heavily the more interest rate sensitive stuff. Because if inflation's not a threat, then what's the Fed going to do? They're going to cut rates. Correct. And if the Fed's going to cut rates, what does that favor? It favors a couple things that we just discussed prior to the meeting. I was talking about that favors the Russell, that favors silver and gold, right? Things that are rate sensitive. TLT's probably having a good day today. Yeah, TLT's up 7.75 up there. So, stocks are gonna love it, broadly speaking. But if you get a little creative there and you have a little more allocation to things that are going to like rate cuts more, such as the Russell, such as small caps in general, those things are doing quite well today. You got the VIX down 6% today, so VIX continuing to suck the life out of volatility, it seems. And we've got Russell up near 2% today. The Asian markets also up today as well. It seems like you're getting a bit of a broad rally. I got to check the heat map for today as well. Just see, look at that, nice green. Semiconductors loving it, but the rest of tech about as green as the rest of them, it seems.
Yeah, and NVIDIA, so next week we have NVIDIA on the 28th with earnings, and we have Core PCE on Friday. But I do think this market is over the inflation threat. I mean, Powell's kind of reiterating it today. Well, obviously, Core PCE does matter. But if inflation's over and done with, now it's going to be employment news every Thursday with unemployment claims. We're going to have non-farm payroll that first week of September. I was surprised the new home sales were up as high as they were. We've had some pretty nasty home prints. I posted a video yesterday. Let me get your thoughts on this. Do you think, I know this chart looks nasty, but let me zoom out here for a second. Do you think it's possible that we just kind of cap this move? Let me go back a little bit further if I can. Something like this, maybe. Do you think it's possible that we have something like this where we just don't do enough to break the highs, but we don't necessarily do enough to break the lows, and we're going to deal with some indecision? Or do you think that this is enough where the pivot to employment and the Fed's going to be more aggressive? Do you think that's enough to get the market excited for new highs? I mean, my thought of, if we're going to an aggressive Fed and aggressive Fed cutting, why are they cutting aggressively? Because we're worried about slipping into a recession. We're worried about the labor market really taking us into a huge slowdown. So I don't know if that's a good thing.
No, I'm with you. And I think that, gold and silver telling us a little bit of story there, right? When gold is ripping 1%, yes, this makes straight up sense because, they're going to reduce the Fed funds rate. That's just always bullish for gold, right? Rate cuts is good for gold. I get that. But again, I was talking about this. I had to cut this thought process short because Powell is stepping up to the stage. But gold is outperforming the S&P 500 this year. That is not a risk-on signal, risk-off signal, if you will. Now, again, I'm not bearish on the market. I've got positioning all over, but my point with that is you can't ignore that forever. Gold going up 1% today, near all-time highs, outperforming the S&P 500 this year. There are reasons to be cautious. And here's my honest opinion to your question about as we get closer to these highs. Here's my take on it. NVDA will decide whether or not we reject that or we break that. I think it really comes down to that, because NVIDIA is such a behemoth in this market. It is such the story stock. And its earnings, it seems like it comes down to it every time, Chris. It's like earnings for NVIDIA. If they hit, the market rips. If they miss, and not the one thing, the catalyst there is they're probably going to beat their earnings. It would be terrifying if they don't beat their earnings.
Sure.
The question is, are they going to beat massively and raise guidance massively again? I don't know. How many times can you do that? That's the question.
Well, and I mean, the argument was going into last earnings season for NVIDIA is that it was kind of priced to perfection, So, I mean, they still beat, but everyone was talking about, well, they barely beat. And I mean, still 5.9 to 9%. But I mean, these were monster beats, like 12.3, 8.37,
on a
19.4, 11.94. I mean, the percentages were way higher the last couple of prints. And the last one we did was a little bit more of like a thinner margin of beating expectations. So I still think it's priced to perfection, where if we do break, I mean, I wonder if it's a stall right in here on NVIDIA. I could see earnings, pushing higher. I could see that being a fade as well. But again, would I short the stock? No, I would just like trade a bear call spread and see if I'm right. If I'm wrong, okay, fine, it's defined risk. But if they miss, who knows? Like if they miss, it's gonna bring everything down in a big way. So
that's the thing, Chris, is as we look at this, as we gear up for NVIDIA earnings, I really think that what the Fed just did is they made themselves pretty clearly not adversarial. Okay, now we have a tailwind. To be honest, as long as the economy's not crashing, we just got a nice tailwind confirmation from the Fed. Hey, we're going to basically cut rates. We're watching the employment data. Inflation, we don't see risks. That's all super positive for the market, as long as the economic data from here doesn't start to sour. If you start seeing sour economic data, bad NVIDIA earnings, you got to be real careful, because then suddenly you're looking at markets all-time highs, S&P, you mentioned RSP, all-time highs. Keep an eye on the economic data. As long as, for me, here's where I'm actually positioned, is as long as that economic data doesn't sour, I stay long. But if something shows up, I'm keeping these stop losses pretty tight to get out of the way. If something, if NVIDIA earnings come in bad, that's a short-term catalyst in my view that could turn into, correction of 5-10% again.
It definitely can.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.